Is ASIC a threat to the economy? Is it time for us to invest in value managers? And can stocks really keep on going up? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Hey, I didn't stuff up the intro this week.
No, well done, Peter. You got the intro right. On the ball today.
All right, but let's go to the first story. ASIC is taking the issue back to the federal court where they got kaplunked by a Justice Peramnai, was it? Peramnai, who actually said if someone eats Wagyu steak and drinks grain doesn't mean they can't pay off their home loan.
It does, Peter. And look, I think ASIC is wrong in this case. I hope they're wrong because this was a really important victory because this responsible lending stuff went too far. It actually created a lot of issues in the home loan market, the property market, and I think that's one of the bigger stories from last year was the way banks were required to tighten because the substantiation of income became so difficult. And we had a lot of people, we had analysts coming out, we had people like UBS coming out with, I forget the phrase they used for these loans that...
liar loans?
Liar loans.
Liar
Look,
loans.
it was never as bad as that.
No.
And ASIC took it too far and the banks had to react. And so it was a humiliating loss for ASIC. Get over it, ASIC. Stop wasting
Don't be nasty,
taxpayers'
Paul.
money.
Anyway.
And poor old Westpac's got to defend this stuff again. So, look, I hope ASIC gets thumped again on this one, right?
Yeah.
I'm no friend of ASIC.
The bottom line is this. Paul is not as pro-bank as you think. The bottom line is we think there should be sensible lending, not this responsible lending. Banks should not be a part of the nanny state. There are plenty of people who might have lived the life of Riley until they got a home loan, and once they got the home loan, that was more important.
Yeah,
they started eating sausages rather than Wagyu steak. They started drinking Crown Lager rather than Shiraz from Grange. All those things get down to the bottom line. How irresponsible are borrowers in Australia? The default rates, Paul, 1.58% of people are only 30 days behind. Like, come on.
Yeah, look, I mean, you're absolutely right, Peter. I mean, look, it is a nanny state, right? And look, you can't, people have to be responsible. The idea that the lender is responsible for the borrower's behaviour is just crazy, right? I agree with sensible lending, right?
Yeah.
You shouldn't be throwing out loans to people who can't afford them.
And then banks should be penalised if they give crummy loans. Penalise them.
And they should lose their money. Right?
Yeah, that's right.
And that's
a free loan to the dud borrower.
That's what happens to the dud borrower. They can't repay it. But at the same time, look, I mean,
this is sensible economics, Paul.
People have to actually stand up for what they're responsible for. You cannot. It's not a victimless society. You want to get credit, you got to be responsible, right? We need to take a bit of personal responsibility for what we're doing here. And ASIC went too far on this. I hope they lose.
Okay, next one. Is it time for value managers? Now, this is a tricky little subject, but Paul, explain what you mean by that.
Well, look, it's one of these fads in the markets. We've had this enormous move into so-called defensives and also growth stocks at the same time. So if you look at what's happened in the last more than 12 months, we've had defensive stocks do really well because of lower interest rates. We've had the market pay huge premium for growth stocks because of
the wax stocks,
the wax stocks. But following on from the US example, and conversely, anything that's sort of bit dull, boring, bit more cyclical, gets sold off. It just sits there and does nothing.
This consumer discretionary companies.
Yeah,
and
a lot of
stuff?
the consumer discretionary, the small industrials just have been abandoned because they're
sorry
growing
for them,
at
really.
2 or 3%, but that's not exciting.
Yeah.
PEs might be low, but no one cares about PEs because you're just chasing revenue and growth in revenue.
Yeah.
And so we've seen, but in the last week or so, big movements in the US, and probably as big a story as the interest rates coming down has been the movement up in bond yields. So US Treasury bonds have backed up 0.3%. They've gone from 1.45% to 1.75% in the space of a week. Same in Australia. And the market is now suddenly starting to say, well, maybe there's all this recession talk, all this QE 4 and 5 coming down the track.
The infallible bond market.
Isn't going to happen. The bond market's changing course a little bit. And as a consequence, in the US, we've seen a bit of a move back out of defensive stocks into so-called value stocks, the so-called beaten-up stocks that haven't moved. And that happened yesterday in Australia. We saw the same. Yesterday, quite a perverse situation. We had the market down 0.5%, yet the major banks, the resource company and the oil majors went up. So what went down? All the tech stocks got sold off. All the so-called expensive defensives got sold off. Source companies like Transurban, Sydney Airport, the REITs get thumped.
Yeah.
Right, so it's had the growth and the defensive get thumped, and some of the so-called more values type stocks
Yeah, but
go
so
up.
for normal people listening to all this crap, Paul, are you basically saying that there's a sense of optimism coming in, the fact that the bond market's optimistic, and that you're going for stocks that were rejected during the scary times?
I think people got. I'd put it all this way: growth stocks have been paid through crazy multiples, right?
Yep.
And so you've got to be very careful of growth stocks. The other thing it's saying is some of the very expensive defensives got so expensive that they are vulnerable. So when you
Like
had
the Transurban or
the
Sydney
Transurban, Sydney Airport, the property trust, crazy numbers being paid on this, a very unattractive yield. So. There will be some opportunities here. It just shows you how crazy the market is, right? Fads come and go so quickly.
Okay.
We're a little bit of a fad now, so I think there might be some opportunities for some of the defensive stocks coming up in the next week or so.
Okay.
But just wait for the market to sell off first. That's what it looks like it wants
And
to
the
do.
next topic is about can stocks keep going higher? And why I wanted to cover this is that the boss of BlackRock, and this is the biggest fund manager in the world by a country mile, he says there's like trillions, I think he said $25 trillion worth of cash sitting on the sidelines. People just basically waiting to see if a trade deal happens and optimism prevails. Now, I guess it gets down to if a trade deal happens, and I don't know, I'm guessing that Donald will go on for political purposes, but there are a lot of people say I'm wrong. But if they do, all that money could come in, Paul, and that would just drive stocks up, wouldn't it?
Well, it could. I mean, and firing Bolton last night, I think, is a big move. Maybe he resigned. A question Donald said he fired him. Who knows what happened? I think we shouldn't underestimate that.
Bolton was a madman, wasn't he?
Bolton
He was
allegedly
like
a
bomb
madman.
everybody.
Maybe he just decided Donald's too bad for him. I don't know. But look, that story will come out. Yeah, look, I mean, I think this is the weight of money. What we aren't seeing, I think, at the same time, Peter, is we're not seeing a lot of new issues in the market, either in Australia or America. So there is a lot of money in here. This is why the market...
New listings on the stock market.
Yeah, so it's the old supply and demand argument. If there's more demand than supply, prices go up. And that's sort of the reason why this market, despite all the talk about recessions, is still grinding higher, right? And despite the bad news we've had in the last month or two, the US market's not that far off. So I think you got to take note of that statement, and dips are going to be bought still. So
and the point that the boss of BlackRock made was interest rates are so low, people have to go in the stock market, and if you take away the biggest scare factor, namely the trade war, then they will come in searching probably low-risk stocks, but they'll go for stocks because they're getting like 1.5% in banks. So it's a very interesting phase we're in, Paul. It could actually mean that this bull market could be one of the longest bull markets ever.
And why I've continued to be bullish on banks, right? Despite their low growth, Peter. The yields are too high, right?
That's right, they're great.
But
don't tell people, Paul, because we're getting it by ourselves, to ourselves.
We are.
I'm Peter
I'm Paul Rickard.
and we're mad about money.